Bill. Bill's going to have to use the microphone too, but he won't talk too loudly. Thanks for coming, everybody. Today we have Bill Abbott, who's here to talk about the AARP Tax-Aide Program. Bill, how many years have you been doing this?
This will be my fifth.
Fifth year, twice, 2 years, or 3 as coordinator?
Coordinator 3.
3. So it's a fabulous service. He's going to answer all your questions. We'll add in, I don't know if registration for this program. He's going to tell you all the details and if you qualify and what's required. But we're going to start taking registrations for appointments on Monday, January 23rd. So just keep that date in mind. Okay?
Okay.
Thank you.
Yeah. All right. Thank you all. You can all hear me? Okay. Again, my name's Bill Abbott, and I'm the local coordinator for the Walpole site, but I'm also the local coordinator for the Medfield site. What I plan to cover today is just do a short overview of the program, the tax preparation process. We'll cover the senior circuit breaker credit, which I think many people are interested in. And then I have a few miscellaneous tax items that you might find interesting, and then just go over a couple of the positions. So with that, we'll start with the overview. Okay, the tax-aide program is a collaborative effort between the AARP and the IRS. It started in 1968. Now it's all through the entire country. When it first started, there were just 4 volunteers working at one site, and now we're up to close to 30,000 volunteers working at over 5,000 sites. There was some drop-off during the COVID period, but we're basically coming back to the 30,000 and 5,000 number. Last year, we prepared 120 tax returns here in Walpole. 57 of the taxpayers got part or all of the senior circuit credit breaker. The tax-aide program is the largest free tax preparation service. It's targeted towards low and moderate income taxpayers. When we're looking at that, there is no particular income limit, but basically what we want to look for is people who would find paying $150, $200, or $250 to go to see a private professional do it. Those are the folks we want to concentrate on, particularly in these days where food prices high with inflation and all. A lot of people on fixed incomes, their income didn't go up to match the inflation. So basically, if your income is 6 figures, we're capable of doing it. But if someone like that comes, they're taking the slot of somebody who in the community who could probably really use the preparation service. You don't have to be an AARP member. You don't have to be a Walpole resident. We have no age limit, although primarily what we see is seniors, because most of the programs are done at senior centers. But we do have a few that are much younger. Now, our tax system is very complex, so we're not able to do everything. We can't do estate taxes, corporate taxes. What we are able to do is the typical thing that probably all of you have. It'd be wages when you were working, dividends, interest, pensions, Social Security, that sort of thing. All our tax preparers do have to pass an IRS advanced test, and the test does focus on the items that most of the folks will encounter. Generally, we don't have a whole lot of cases where people have children, but we do have some, and so we can handle those things, student loan credits, child tax credits. and cases where the people have kids that are in daycare so that they can continue to work. For Massachusetts, we also have internal training that we do because there are some special things that Massachusetts does differently than the federal do. There are certain things that we are not allowed to do, and these are the items that are out of scope. Rental income we can't do. Cryptocurrencies, those bitcoins, those things, we can't do anything with those. Small businesses, occasionally you might get one, maybe two small businesses. We're limited in that they can't have inventory, can't have employees, so they would really be a very small operation. And like I say, maybe we might get one, maybe two in a year. Alternative minimum tax is another thing. When we post the list of things that are out of scope, you'll be able to see, but most of the things I would think that most people just don't encounter. Next thing I want to talk about is the tax preparation process. The first thing you're going to do is you're going to make an appointment with the COA, and I think Debbie mentioned that it was late in January that she's going to start taking appointments. What happens is a COA will then send out a letter listing the things that you need to have, and they'll also provide you with an intake form. It'll look something like this. It's a 6-page form. Don't get scared with the number of pages. I'll show you some of the information. We'll ask you to complete that form the best you can. They're not too tough questions. The other things that we're going to need is picture IDs, government-issued picture IDs for the taxpayer and a spouse. If you also have anybody else, we don't need to have a picture ID. We do have to have Social Security cards for anybody who's going to be on the tax return. And that, if there were young people, we'd have to have their Social Security card. The SSA-1099, that's the form that the Social Security is going to send you, the equivalent of a W-2 when you were working. We'll accept that if you don't have your Social Security card because it came from Social Security. Of course, we'll need all the tax documents, the W-2s, the 1099 interest, 1099-R for pensions, and so forth. If you're think that you're going to have your return itemized, which we do very few itemizations now because the standard deduction is so big. But again, we may do one or two of those. But if you think that's going to be the case, obviously we'll need the information, and generally it's medical information to be able to prepare a tax return where we're itemizing. We wanted you to provide your last year's tax return, both the federal and the Massachusetts. And the reason we want that is that a lot of times we'll ask, did anything change? And if you say no, okay, then I'm expecting your federal return and your state return to look pretty much the same. Of course, the numbers might change a little bit, but I shouldn't see a dramatic change. And if we discover a dramatic change, then I have to look and say, what did I forget? Or what did you forget to tell me? And oftentimes there's an explanation. Oh, we closed out that IRA. Okay, that's fine, but we want to be able to account for everything. And that's where having the prior year's tax return is very helpful. Because the last thing we want to do is do a return. We're missing a form. I don't know what's missing. We send it in, and then they reject it, and now we've got a problem we have to address. And if it does get rejected, we will correct it and get it straightened out. But it's certainly not something we want to do. For those who will be interested in getting the senior circuit breaker credit, what we're going to need is, if you're a homeowner, we need the paid property tax and sewer and water bills that were paid in this year, 2022. It's not key when they were issued, it's when you were actually paid. And if you can't find those, you can go to the collector's office at Town Hall and you can ask for a real estate paid tax statement. Takes them but a second. Just go to the window, tell them you're having your taxes done. They produce these things all the time. And that one lists all the information we need in terms of your property tax. As far as sewer and water, they can give you another form. But the important thing is we have to have what was paid in the tax year, which is going to be 2022. For renters, and renters are eligible to get the senior circuit credit break, we're going to need the name and address of the landlord. So we've had occasions where someone's interested in getting it, and then when they find out, oh, is my landlord going to know that they got rent paid and weren't maybe reporting it? Well, they should be, so. All right, this is the page one. It's basically name and address, date of birth information, and down here, anyone who's living in the home with you. They don't have to be a dependent, but we want to know who's there because they may, in fact, be a dependent. That's something that we're trained to be able to spot. And the second page is the other one. This is very important, and it's key for us being able to do an accurate tax return. The first section, we're listing all the types of income. And they have the number that you're going to see on the form. So it's an easy checklist that you can just go down and check yes, no, and if you're not sure, check the unsure column. The next one is the expenses. And these are some of the expense items that can produce deductions, which of course you'd like to have. And the last one is what they call life events. These are other items that could have happened during the year that can reduce your taxes. The remaining pages really just collect demographic information that the AARP can use. They want to be able to get donations to do this program. When they ask for donations from corporations, foundations, they want to know, well, what are you using with this donation? And they were able to say, we did so many taxes for people at this income level, or how many for seniors, how many for widows, and so forth. So it's easy answering questions. The final pages are the consent questions that allow us to e-file your return, may restrict what the AARP does with the information, and so forth. Okay, the actual preparation of your tax return, the first thing we're going to ask is we need to see your picture ID. And this is to protect you from fraud. We don't want somebody showing up claiming to be somebody else. So that's why we need the picture ID. And then we'll want to see all the Social Security cards, or like I said, the 1099, the SSA 1099 works for that. We're going to go over the entire intake form just to make sure that if there were some items you weren't sure on, we'll discuss it and we'll find out the answers either yes or no. And we'll finally ask you, is there any other income? We can't knowingly prepare a false return. So if there's anything that wasn't covered on the intake sheet, now's the time you got to tell us so we can take care of that. We prepare both the federal and the Massachusetts returns on a software called TaxSlayer. It's similar to TurboTax, if any of you have used those, or TaxAct, and there's some others. It's not as chatty as those programs are, but it can handle all the states that have income tax, and we can do amended returns and so forth. After we've prepared the returns, the next thing, and it's a very important step, is AARP requires that every tax return that we prepare is reviewed by somebody else other than the preparer who has the same certification. And since we have all our preparers certified at the advanced level, any of us can review any of our other tax returns. And here we had 4 preparers last year. I'm hoping to have 4 also this year. But it's very important to come up with an accurate return. We want to make sure that the numbers were entered were correctly. Did we enter everything? Did you get the deductions that you're allowable to get? And then we're going to review the tax returns with the actual taxpayer. Taxpayers always want to know, am I getting a refund? Or, oh, how much do I going to owe? Well, we're going to tell you those things, but we're also going to go down line by line and tell you, here's where your Social Security was, this is your interest you told us, here's the deduction you got, and that sort of thing, just so that you're fully aware of your return, because it is your return. Then, once we're complete there, the taxpayer is going to sign the Form 8879. What that form says is it gives me the permission to e-file your return, and also you're signing saying that you understand that it is your return, that you provided the information, you're responsible for it. Then we're going to the last step, is we're going to take all the information that you gave us, your W-2s, your 1099s and so forth, and your returns. And if there were information we used to itemize, everything goes into an envelope like this, and this is what we'll ask you to return next year with. And that's, so we'll have everything there. We'll know what the prior year's return was, and also how we arrived at that information. And then the final step is then I e-file your returns. Usually I do that in the afternoon, late in the afternoon of the day that we're doing the taxes. We here have been doing taxes between 9 and 1 o'clock. We do them at an hour per person. So we can do, actually I set it up to have 14 so that I've got a little leeway in case somebody has a long return. We can keep pace with the appointments. The next thing I wanted to cover is what a lot of people are interested in, is the senior circuit breaker credit. To be eligible, you have to be a Massachusetts resident. Either the taxpayer or spouse has to be 65 or older as of January 1st, 2023. So in other words, just a few days from now is the point where they have to cross over. It doesn't have to be both taxpayer and spouse, but at least one has to be over 65. You must own or rent residential property and occupy that as your primary residence. There is some income limits, and I put total income in quotes because it's not what people expect. It's not your taxable income. Basically, if you got any money, it counts as total income. And I'll have a slide that'll show all the things that apply. But these are if your total income is over these limits based on your filing, then you're not eligible for return. If you're doing it as a homeowner, we're going to look at the assessed value as of January 1st, 2022. In other words, the beginning of this year. That will be on your property tax bill. It can't exceed $912,000. It's pretty high. These numbers here, the income and as well as the assessed, has increased every year as time goes on. Next thing is who's not eligible. Well, obviously, if you were a Massachusetts resident, then you don't fall into this first category. If you're married and your filing status is married filing separately, you're not eligible. Generally, we don't have that case. Usually there's one or two. For whatever reason, we have somebody who is married but filing separately. If you're a dependent of another taxpayer, that's another unusual situation, because usually if you're a homeowner, you may have dependents, but you're generally not a dependent, but it's possible. If you receive federal or state rent subsidy, or if you're renting from a tax-exempt entity, you're not eligible. The idea being that we're giving you a credit, but if you're already getting some sort of a subsidy, you're not going to be able to get a double credit there. And the final one is, and we run into this occasionally, is the property's owned in a irrevocable trust, and that's the trust that you can't make changes to. Then you're not eligible. as a homeowner. If you're paying rent to the irrevocable trust, then we can probably do something. So if you have a trust that owns the house and it's a revocable trust, that's okay. Now, I mentioned about total income. Well, the first thing is everything that's mass taxable, and that'd be the wages, interest, dividends, pensions, the things you would have expected to be your income, plus Social Security. Massachusetts does not tax Social Security, but you receive money, that's part of the total income. Interest deduction on interest for Massachusetts banks. If you're a single person and you have interest in a Massachusetts bank, and certainly like the Walpole Co-op or Dedham Savings, but also Bank of America is a local Massachusetts bank. What they have to do is have an office that you can go in, and cash your check or make a deposit. That qualifies as a Massachusetts bank. The reason that I'm mentioning this deduction, if you're a single person, the first $100 of interest from a Massachusetts bank is not taxed by Massachusetts. If you're filing as a joint, married filing joint, $200 of interest. These days it's tough to get that type of interest, but there are occasions where people have maybe CDs or that sort of thing that gets up to the point where the interest deduction there has to be addressed. Untaxed pensions. You'd say, well, untaxed pensions, who's that? Well, all federal, state, local, county pensions are not taxed by Massachusetts. They are taxed at the federal level, but not at the state level. Also, some state agencies like the MBTA or MWA, we see some folks who are getting a pension there. Those are not taxed by Massachusetts, but they do receive income. It has to go in. And the last one, and we rarely see, but you can see there's like all sorts of things. I was kind of surprised when I first looked at it that, food stamps, welfare, fuel assistance that was directly paid to you. I mean, all those are considered that you got some sort of income. And if we're going to give the senior circuit breaker credit, we want to know what's the total income that we're talking about. There's a few items that you might have received, life insurance, or if you did some work and there was no money changing it. I did some work, you're doing something for me. Those situations aren't considered. So how it's calculated, for a homeowner, what we take is your property tax, and it's again what was paid in 2022, plus 50% of your sewer and water bills, that again, what was paid in 2022, and then we're going to check to see, is that greater than 10% of your total income? If that is, in other words, you're paying more in property tax and sewer and water than your 10% of your income, then, and you meet all the other criteria, you would be eligible for the senior circuit breaker. Now, I mentioned that renters also can get this. They don't pay property tax, obviously, and they're not going to have sewer and water bills. What the state says is we're going to consider 25% of your rent to be, and again, what was paid in 2022 as, in effect, your property tax. So we're going to take 25% of your rent and check to see, compare it against 100% of your, 10% of your total income. And the maximum credit that you can get this year is $1,200, and that's something that's been increasing over time. When I first started doing it maybe 5 years ago, I think it was $1,130, and it went to $1,150. They keep seeming to add a couple, $20 each time. Just to give a couple examples, from a homeowner, if you had income of $56,000, sewer and water of $4,000, and your property tax was $6,000, the property tax ends up being the $6,000 plus half of the $4,000, and your total is $6,200. We're going to compare that to 10% of your total income, which was $56,000, and the arithmetic works out. The $62,000 minus the 10% of your income comes $600. It's less than, it's not zero, it's not over $1,200. That would be your senior circuit breaker credit. Here, just an example with the income was a little bit higher. You go through the same process, and in this case, the property tax and water and sewer was less than 10% of the income. If it's negative, you don't qualify. You may have qualified by all the other parts, but your total income compared to your property tax was just doesn't make it for the credit. Just using a sample where we had a lower income, and in that case, the amount after doing the arithmetic came up to $1,600. Well, the max is only $1,200. That's the credit that you would get. Like I said, last year, 57 of the 120 taxpayers that we did returns for did receive some or all of the senior circuit breaker credit. And that is refundable. If you owe no taxes and you get the credit, you're going to get money. They're going to actually refund money to you. The lowest I've seen, the smallest senior circuit breaker credit that I saw was $3. So it'll go down. But they happen to have a case that was very close. I'm not going to go through the renter's case, but again, the situation, the only thing that's different is we're talking about 25% of your rent as opposed to the property tax and your water and sewer. So that's what I wanted to cover on your senior circuit breaker. There's a couple of items that I thought you might be interested in. And let me just get to that here. All right. The first one is a 1099-C. We don't see them very often, but if you have debt that's canceled, and you've probably all heard ads on the radio or TV that the banks don't want you to let you know this, but we can get your part of your what you owe on your credit card wiped out. Well, they can do that oftentimes, or you could talk to your bank and say, look, I'm just not going to be able to pay, $30,000 on my credit card, and however you work it out. And you may think that you're all free and clear. No, that's considered income. And oftentimes, hopefully none of you run into this, but we've had cases where they were surprised. They thought they were okay, and all of a sudden they had like maybe another $20,000 that showed up on their income tax, and all of a sudden thinking they were going to get a refund. No, they had to pay, unfortunately. Unemployment. We saw a lot of that during the pandemic because a lot of businesses had to close, and people who weren't familiar with the process, they applied for unemployment and they got it. Unemployment is taxable. And for folks who work seasonal jobs, they generally know that, yes, I can have withholding taken out. And what we did find in there were cases that it was somebody who business or where they worked shut down due to the pandemic. Well, they got unemployment, that helped them along, but there was no withholding out on that, and sure enough, there was kind of a surprise there. There was a number of credits that applied during 2021, the prior tax year, as a result of the pandemic. Some of them increased the amount of a credit. Some of them increased the limit of income on a phase out. Some of the credits, you can get a full credit at certain income level, and as your income increases, you may get 90%, 80%, and so forth before it disappears. They increased those limits. There were some credits that were non-refundable became refundable. Now they're going back to non-refundable credits. And basically what that means is a refundable credit is if we figure your taxes and then you are qualified for a particular credit and it results in you getting a refund, you're going to get that refund. A non-refundable will just bring your tax that you owe down to zero. So in other words, you can't get a refund. Well, during the pandemic, they shifted some of those credits so that they would be refundable. Now they're going back. One thing that a lot of people are going to find out is that Normally, if you're deducting charitable contributions, and that can be cash, credit card, or an actual check, you were able to deduct up to $300 if for a single person, or up to $600 if you were filing a joint return. That has been totally wiped out. So if you have charitable donations, it's going to have to go through the itemization process. And like I say, with the high standard deduction now, we rarely do itemized returns anymore. Next one is Chapter 62F. I'm sure you've all heard this. If you paid taxes in 2021, and I'm not talking about getting a refund, I'm saying you actually paid taxes, then the state, as a result of a law, was back in 1987, that limited the amount of taxes that the state could collect. And in 2021, they collected $41 billion, and they were really only allowed to collect $38 billion. That was $3 billion excess. And they have to return that back to everybody, and you would have gotten a check or direct deposit in November and maybe early December if you paid taxes in 2021. So that's something that it will not be taxed at the state level, because they're just returning money that you paid on taxes. From the federal government, if you itemized and you use state taxes as one of the items in the itemization process, we may have to do an amended return, because we were counting taxes that you really didn't have to pay. Again, I'm not expecting we're going to find many of those, because we do very few itemized tax returns. The next one is something that was specifically to Massachusetts. Early on, and I think it was either in 2021 or maybe early 2022, the state provided $500 for essential workers. And this was geared for low-income frontline workers. You know, we had a lot of people that were the cashier at the grocery store. They had to be there, nurses and so forth. So that one, I'm waiting to find out if the state's going to tax it or not. I don't know. You'd think at this point we would know all the information on how to do tax returns, but we won't know, particularly in the state, until mid-January. I'm thinking that they're not going to tax it. The federal government, I suspect, will tax it, because it was income that you received. The next one, and here's something where I mentioned that we don't necessarily know everything at this point on how to do taxes. The IRS, for these third-party payment processes, the PayPals, Venmo, Cash App, I don't know if any of you use it. I know a lot of the younger folks like to use particularly Venmo. The prior regulation was that if you had less than 600 transactions and your total amount was less than $20,000, these PayPal, Venmo, etc., didn't have to provide you with a 1099-K. The IRS is recognizing, particularly with the pandemic, that a lot of people started working, doing gig work. They weren't working for employers, and they were getting paid through these third party, and it was not being collected. So they were changing it so that if you had $600 of income that went through, then you were going to get a 1099-K. And just within the last week or so, the IRS was getting such pushback, they decided to push that back 1 year. So this was relevant when I first prepared the presentation for the COA board folks, but apparently with these third-party pay processors, you can specify whether it was for goods and services, in which case it's taxable, or no, it's just me and you going out to eat, and we're splitting the bill and you're paying me back via Venmo. Or I know I'm in a golf league and a bowling league, and the treasurer offers us, you can send it to using Venmo, or you can write a check or cash or whatever. Those things are not taxable, so somehow they're going to have to separate those out. And I think what the IRS, why they made their decision to change, is that if I get a 1099, I got to enter this stuff. And if it's not correct, I'm going to have to tell you, well, you're going to have to go back to PayPal or Venmo and get it corrected. And I think a lot of the tax preparers are saying that's just going to create havoc. So we don't have to worry about that one this year. The last two here, one, if you owe the federal government more than $1,000 or more than $400 for the state, you're liable to get a notice from either the federal government or the state saying you have a penalty. If you're just over the limit, probably you're not. If you owe $10,010, generally you're not going to, because it costs them more to process. But there are cases where people get surprised and they owe a considerable amount. I just wanted to let them know that I can't do anything this year. It's the way the return turned out. But for next year, we would explain how they could use estimated taxes, or they could get, in a case of a pension, they could contact the payer of the pension that you want some withholding. And there's a form W4V that you can file with the Social Security saying that you want some money taken withheld. And I would say maybe 20% of the people that we do returns for who get Social Security are having money taken out. If you're on the other side, if you get a large refund and you'd like to get more income during the year, and I can see where this might be the case where you like getting that present at the end of the year, a big refund, but if the grocery bill's going up and gas is extra and so forth, you might say, I'd like to have a little bit more on that monthly check that I'm getting from Social Security. You can, that's the problem, you can use the same form to lower the withholding if you're doing that, or if you're having money taken out of your pension. Again, you call them and say, I want to lower that amount that's being withheld. The last thing is if you're interested in volunteering. We have two positions, and it's really not something that you can do this year, but the first one is a client facilitator. And what that person does is they greet the taxpayer, they make sure that the intake form is filled out. They said they had an interest from whatever, we check, oh, where is that document? Okay, it's basically just greeting the person, making sure we've got the forms, and it's a way to sort of dip your toe into the process, and you can find out, oh, it's not that hard. And he did it, well, I bet I could do it. The other one is the tax preparer. Like I say, we have 4. You have to pass the advanced test. The questions are generally, they describe a situation and then you ask you a question about it and that sort of thing. It's the hardest thing you'll do. And when I say that, it's because most returns, I'm entering interest, pensions, Social Security. No one has any kids for the tax credit. It's fairly easy to do in most cases. The people that we have who are tax payers, tax preparers, some of them work for H&R Block, they were accountants. Others have worked with, or they work for some other tax preparation service. They may have prepared their own taxes with TurboTax in the past. That's where I fall in. I never done any taxes, professionally or anything other than just mine. And the other is if you really understood how your tax return. So when you looked at it and you went beyond, did I get a refund or how much I owed? Yeah, sort of paid attention to, oh, I see, they added these numbers down. And it's really, the actual process is not that complicated. And there is no math. The software does all the arithmetic. It's up to us to enter the information correctly. It's a real good program, and it's very worthwhile. I mean, it helps a lot of folks in our community that are at lower or moderate income. being able to get something that they have to do. You have to file your taxes and get it done for free, as opposed to paying $100, maybe $200 or more dollars. And the other thing that I really appreciated, I just happen to be in the center, or this summer I'm watering flowers out there or whatever, and someone comes up and said, "Geez, I really appreciated you did my taxes for me," or I participated in the program, and that makes it worthwhile. In addition to it, we're doing a real nice program for folks. And with that, if you promise not to ask any real hard ones, I'll try the questions. Yes. Yes.
What if you live in a condo where the water and sewer are complex-wide and not individual?
I was waiting for that question. I knew they were going to be asked. Yes, and we can do things, but it's going to be some work on your part. Again, the monthly assessment that you're talking about, it combines your trash collection, mowing the lawn, snow plow, and whatever. You have to find out what percentage of that was for sewer and water. And then we can then take it from that point, take half of it and go through the calculations. So it's something that you're going to have to do a little work. And it could be that you're in 25 units. They can say, well, I can tell you what it is for the entire. Then we would just divide it. Your share is 1/25. Others where they have maybe inside internal meters, the way they sort out, we take that information. We want to know, and what I would do is on the intake sheet, I would document that's how we arrived at the sewer and water, so that in subsequent years, because that will be in that envelope, we'll know how to do it in case you forget. So, anyone else have a question? All right. Well, I thank you all for coming, and hope to see some of you do your taxes. Okay, well, thank you very much.
Thank you.
All right.